Welcome back to Market on Close. I'm Marley Caden here in Chicago alongside Sam Vadas in the New York Stock Exchange. Now it's time for overlooked stocks. Rambus surged to a 25-year high today after Baird raised its price target to $120 from $90 and kept its outperform rating. The firm says that it sees, quote, multiple product revenue growth catalysts in the second half of fiscal 2026. The stock is up more than 30% this month. With more, let's send it over to Sam in New York.
Thanks so much for that, Marley. I am now joined by George Tsilis, who's the senior markets correspondent. And as Marley said there, George, we are looking at Rambus, and this stock has caught a huge bid today to 25-year highs. What is driving that move?
Well, I think there's a few things going on with Rambus, which is actually quite a pronounced company when it comes to the semiconductor space. If you look at their core business, they're essentially a memory chip interface and silicon intellectual property design company. So they're an architect and designer of chips, much like companies like Synopsys or Cadence. But at the same time, they have about 55% of their sales in the dual memory markets or DIMM markets, which are used in servers, laptops, as well as desktop computers. But the other thing about their business is they actually produce application-specific circuits that are used in the automotive end market. So I think there's been a catalyst associated with Rambus's core markets, both in the data center space, security, but also the high performance, if you will, aspects of the server markets as well, which again is one of their larger end markets. And if you look at their sales last quarter, they posted about 45% year-over-year growth. In the last 12 months as well, the growth rates have actually exceeded 35%, which are more than double their 5-year averages. So I can see why the stock is up about 130% today, or this year, up about 10% today, forgive me. But if you look at Baird's call, they actually still see strength in their core markets and their dual memory markets, which serve those server markets, and of course PC and desktop computers and laptop computers. But I think the automotive end markets as well are very constructive for Rambus. Not to mention, about half of their sales are intellectual licensing royalties, whereas the other half essentially are from manufacturing chips that are used, again, in the automotive end markets. But I think what the big catalyst in the last year for Rambus is that, irrespective of the fact that it's made this nice move, they don't necessarily have a lot of debt. It's very low to speak of, but at the same time, on around $8.9 billion in market cap, they have about $600 million in cash as well. So they have strength in their balance sheet, but their growth rates, both in sales and EBITDA, are more than double their 5-year averages, and I can see why the stock is hitting some new highs today.
It's a fascinating day, particularly in the semiconductor space. I mean, we're very much seeing tech outperforming, despite some of the China headline risk. I know this company does not have a huge amount of exposure in China, as you say, right. Very much a beneficiary of the AI and data center demand here. I'm just wondering, for those who aren't very familiar with a name like this, where does it sit in the grand scheme of things, and sort of what sort of companies and hyperscalers do you look to as to understand where this sits as far as a beneficiary in all of this, and also some of the competition and challenges for this one?
Yeah, so I think if you look at the competitors, ideally speaking, companies like Marvell, which are in the ASICs or application integrated markets for chips, Cadence and Synopsys are in the IP space or licensing technology space for chip design. So these are a couple or a few names that they compete in. These are large scale names. I think the reason Rambus has actually excelled relative to all these other competitors quite nicely, not just in the last year, but over the last 3 years, is this a niche player. They're a fabless technology company, so they don't have exposure to manufacturing or supply chain issues. The other thing is about 45 or so percent, I said about half or roughly half of their revenue is royalties. And so essentially, that helps insulate them from other aspects of supply chain issues or geopolitical tensions or even tariffs. So I think that's why it's, again, a little bit more in line with, again, being a little bit insulated, let's put it that way, than some of those other competitors like Marvell, which has essentially quite a large exposure in China, and they've lost their way relative to bigger players in the ASIC space to companies like Broadcom. But the Rambus really has a dual line of business, and I think that speaks to why it's very diversified in terms of its sales. And the competitive landscape for Rambus is relatively low since it's a smaller niche player. But I also think the automotive business is quite a catalyst. Not only are automotive stocks, General Motors, for instance, we see some pickup in companies like Tesla as of late, even XPeng, which is out of China. The automotive markets, even though prices are falling for things like EVs, are in high demand for memory modules, and I think that's where Rambus has really taken off because they have exposure to the automotive markets where Marvell and Synopsys and Cadence don't necessarily have as much exposure. And I think that's what's kind of a standout in Rambus's case versus some of those other competitors.
Yeah, you raise a really fascinating point about how it's perhaps insulated from some of those other challenges and headwinds. Also, it's a very diversified business. But I do want to pick up, George, just very quickly, if you could explain to us, on that auto exposure, there seemed to be a time within that earnings season that we've just had, as far as some of the quarterly reports, where we were sort of talking about this bifurcation that if you did have exposure very much as a semiconductor player here to the auto space, you potentially weren't doing as well as some of the others, more so in the AI space. I'm just wondering, where that sort of thinking and that narrative has somewhat shifted, given, the pace of EV adoption, etc. Where they sort of stand in the grand scheme of things when it comes to that.
Well, I think if you break down their technologies, one of the aspects of Rambus, which is unique, is their high-performance memory chips. They're also memory chip subsystems as well as what they design. I think if you consider the context of the automotive markets, irrespective of the challenges the automotive market is facing from the quantity of sales and prices that have actually been constraining for consumers, there's a lot of competition and a lot of volume that's being presented in the marketplace. Prices are falling. Companies like Tesla are increasing their volume, even though Tesla struggled in the last year, just comparatively speaking. Many other players in the space, like XPeng out of China, are increasing their volume quite substantially. And so if you think about the nature of artificial intelligence and processing power in automobiles, for instance, which is a niche market for Rambus, they need basically high-performance chips, but they also need chips that have thermal conductivity, which basically means they dissipate heat, and they're basically low energy utilization chips, which again is something that's needed in the automotive space. Obviously, in the data center space, you want a chip that's very high performance, also that conducts heat very well, but also you want one that uses little energy, and that's where the IP component of Rambus lies relative to some of those other performers out there or competitors. Is their chips provide high performance, but they also provide that with low energy intensity, and that's high yield to the consumer.
Awesome stuff, George. As always, thank you for helping us get across that one. A really important look at Rambus, which is on a tear today.